Welcome back. So it's a good morning for equities. Let's see what's happening in the world of commodities. We have Manisha with us in the studios now. Manisha, good morning once again. So what do you have your eye on?
So I'm looking at the crude oil prices because the major price moves have come in for this one. We've seen near 3% of decline in the overnight markets. And with that, when you look at the last 1 week, it has been a 6% of a cut that you can see in case of crude prices. Well, a few reasons why the crude prices are under pressure. One, the supply concerns really seem to be going away. And this is as there are hopes of a Middle East ceasefire coming in. There are conversations happening right now in Cairo, Egypt, and that perhaps has taken some premium of those prices. The other thing is about the China demand concerns. All the economic data that we have seen come in from China has been on the weaker side. The Chinese demand itself has been weaker. And when you look at the Chinese exports, especially when it comes to gasoline, well, they declined by 35% in the month of July on an year-on-year basis. Apart from that, it is also about the soft refinery margins. The heating oil prices also are trading at a 14-month lows. So when you add all of that together, if you look at the last 1 week itself, we have seen very sharp decline come in for the prices. Crude oil, as I was telling you, is down 6.5% in the previous week. We also have seen 5 to 6% of decline come in for gasoline and heating oil, and the gas prices also have declined by more than a percentage point there. Important to watch crude because the latest PPAC data shows that when it comes to self-sufficiency in sense of crude for the Indian markets, well, that has actually seen a decline from almost 12.2% in the previous year. The first 4 months show 11.7% of self-sufficiency for the Indian markets. And the next table will also show you on what is the crude oil import dependence that India has. Well, it was at around 87.8% of what we were importing as per our requirements, but that has gone to a higher 88.3% in sense of, and this is of course for the first 4 months of this year. And as you can see, it clearly has been rising. India imported 84% of its requirement in FY21, 85 to 87, and we only seem to be going higher there. So very important to look at the crude oil prices in the international markets, and of course a decline today does augur well.
All right, thanks very much, Manisha, for that.